Good morning, everyone. Welcome to the live stream for Monday, February 26th, 2018. And as you can see, the major stock indices are having a very good start to the morning. A little bit of a pullback shortly after the open. This is a 4-minute chart. Let's switch to a... One second, I'm probably just going to close this position here. Switch to a minute chart. The only problem with the 4-minute chart is that it doesn't capture the 7:30 open exactly. The 7:30 open was right here. So, good bullish run up, but then a pullback, pulled down to this trend line, which I'll show you how I drew that in a second, and then it's just, Nelly bar the gates. The NASDAQ is just ripping higher. It's up, between 6 and 7/10%. This is the NASDAQ 100 futures. The Dow's up almost 200 points. I mean, that shot up 40 points in like the last minute or so that I've been talking to you. The NDX is up just about 54. The Composite's up 50. The SPX is up 16. The Russell's up 5.6. So right now the NDX is the leader. The Dow is shortly behind it, up 0.8 and 0.75% respectively. What's interesting here is the VIX is down, but the volatility on the Russell is up. So that's an interesting divergence to note, and it actually just dropped from up 1.7 to only up 11, 0.1%. The Russell is, now it's up 1.3%. The Russell right now is the most troubled, I would say. In the past, I've said I think the Russell is going to be the one that's either going to lead us up or down. It's shown the most strength when the indices were strong, but it's also kind of shown, there have been days when it's shown the most weakness. There have been days where it's shown the least weakness on a down day. If we take a look at the put-call ratio on the IWM, which is probably the biggest ETF that tracks the Russell, the put-call ratio is very bearish. So just, to reiterate, the put-call ratio is you take the number of puts outstanding on a particular underlying security. In this case, we're going to look at the IWM. And what's interesting, I just noticed this, the put-call ratio on the IWM now has dropped quite a bit. The put-call ratio is the number of puts divided by the number of calls, and anything below 0.75 as a ratio is considered bullish. Anything between 0.75 and 1 is considered neutral, and anything above 1 is considered bearish, which would make sense because there's more puts being transacted than calls, and puts are generally, you buy a put to protect yourself against a down market. So this put-call ratio is now changing as we speak. It was 2.5 over the weekend. The put-call ratio on the DIA, which is the ETF that tracks the Dow 30, is now very bullish, 0.489. SPY is the S&P 500. That one's pulled back to 0.75, so that's on the cusp of neutral. And then the Qs were the least bearish over the weekend, and now the Qs actually are the most bearish. 2.3 is the put-call ratio, and you can see 37,000 puts versus 15,000 calls in total volume today. Now, my call, looking at the charts, has been for the NASDAQ 100 and the NASDAQ Composite to trade their way up to their recent high. 1 second here. And there's a very good shot we're going to do that. The NASDAQ has gapped up. This is Friday's close. The NASDAQ has gapped up. So it had closed at around 68.96. It's now trading at 69.59. So it's, you know, it's gapped up about 160 points from the close. So it's within 70 points. Am I calculating that right? 65 points, which is just another day or two of bullish action before it hits this all-time high of call it 70.23. Okay. All right, enough moving around here. Okay. So I don't have a lot in options positions. I've got the VWO, which I've had for a very long time. I've got Facebook, which is right now doing quite well. I've had this for, let's see, about a week. I bought it on the 18th. So, yeah, about a week and a half in trading days. And then the VWO. Now this short call, I've been flirting with the idea of, do I want to buy it back? It's given me a little bit of a hedge. Of course, the VWO is only up, 9 cents. Looking at, my stochastics, which is my favored view. I mean, I see continued bullishness on the VWO. So I'm going to hold off on doing anything with that right now. My max profit, it's at 48.74 right now. So my max profit would be, I'm not going to, I'm not going to lose anything above about 50. If it pulls back to 46, that would be a good time to buy back that short call, or consider just liquidating the position altogether. Depending upon how much time decay is, when this happens and how much time decay has occurred in the short position, and et cetera, et cetera. So but that's not a bad place to be right now. I mean, $145 profit in a very quick trade in the NASDAQ futures. Now the NASDAQ is pulling back a little bit, experiencing some softness. You expect that. You're going to see push-pull. I was going to show you how I drew those trend lines. So basically this light green trend line, that was there from before. I drew that on Friday, I think. I drew this one also, and then I drew this one just as a tertiary trend line, which right now is the prevailing trend. So if it pulls back below this purple line and closes, then I would watch it go down to the secondary trend line. Because there really isn't any other trend line that can be drawn. If I draw from here to here, it's already cut that. So there's no level of support that it hasn't already basically just violated. So I'm going to leave that alone. So that high that was just hit, that's a 4-day high, because this is a 4-day 4-minute chart. And honestly, it's probably longer than that. Gold's up 35 basis points. The dollar's up now, not much, 0.04. The futures on the 10-year note are up, which is not surprising at all. The index for the yield on the 10-year note is still down 1%, so it's holding pretty steady there. Volatility on the Russell has now increased even more. It's up 2.7%. It was 1.3 to 1.4 when we looked at it about 10 minutes ago, 15 minutes ago. The VIX is now below 17. And as I don't know if I've said this in videos or the written version of Trader's Espresso, but the Russell is kind of like the canary in the coal mine. It's the first one that leads us out of a correction. It's the first one that leads us into a correction. So the fact that there's this divergence between volatility in the Russell and volatility in the S&P, which is basically a measure of volatility of small and mid cap compared to large cap, I think is noteworthy. Dow is now up 225 points. NDX is holding steady, composite holding steady, the SPX up 16, the Russell looks like off of its highs. Yeah, Russell off of its high now, and actually now having broken through the 10 period average, heading towards the 20. The 100 just crossed above the 200. So the Russell decidedly bearish. And remember, the Russell, we were watching the put call ratio basically plummet in real time. And now Russell futures are just getting hammered. And now, look at this. The put-call ratio is back up above 2. It was below 1, so that was neutral. So I think these Russell futures are going to be a play to the downside for me at the right location, the right point. You know, I never really like chasing it down. I like to buy on the rip, or sell on the rip rather, when it exhibits a little bit of strength, which it's doing right now. Diamonds are neutral still, 0.609 on the put-call ratio. Spiders, 1.2. So that's mildly bearish. Nowhere near as bearish as the Qs or the Russell, the IWM. Now the VIX is up. The VIX is up 0.25%. The volatility on the Russell is up now 3.6%. So that's come up quite a bit. The Russell futures have traded down to this 1548 level, which was a previous overnight low that, for whatever reason, I have marked on and still on my chart. Just saw new home sales. Looks like, if I'm reading this right, looks like new home sales have come in softer than expected. Let me confirm that. Yep, softer than expected. Percent change month over month consensus was 3.2% positive, was actually down 7.8%. The month over month called for an increase of 645,000 new home sales, came in at 593,000 new home sales. So that number would have been published at like a minute ago. So that does not explain this bearishness in the Russell. It does explain maybe the Dow pulling back a little bit, the composite, and the S&P. If you look at XHB, which is the ETF for new home builders, I mean, that was down before the numbers even came out. So somebody had an inside track on that. And, honestly, would not come as a surprise because of the rise in yields and the corresponding rise in mortgage rates. And right now, at least for the time being, the Russell futures have found a bottom at this 1548 level. Making a move towards this 243 period moving average. That was a trend line. That was a trend line. That's looking like a good one to keep on there because it was support, now resistance. Kind of a minor. if we draw a Fibonacci retracement plot, does this make sense? What it did was trade up through 23.6, kind of float back and forth across the 38.2, which is a major retracement level, do a little bit of the same with the 50, hold at the 61.8, trade up above 73.6 but not able to retake the highs, and then trade back down, finding support at the 38.2, sort of a couple of times. I mean, it trades down, bounces back across, trades up. So just really all over the place. So here today, traded almost up to the top, and it just plummeted from that point. So it made one attempt here, had some softness, made a second, made 1, 2, 3, 4 runs at. The fourth one was the most successful, and then it just dropped. And now we're about to break below this trend line and the previous low for the day. Which we just did. That's a signal to get short. Now, I'm going to watch what it does here at this moving average. Because it might play a little trick on us. I'm going to put a stop in at 1549. The 73.6 is not really a major level of retracement on a Fibonacci plot. So I want to show you here. This 200 period MA was a level I was watching. On a 15-minute chart, this is the 100 period MA. So yeah, you do want to watch moving averages across multiple time frames, especially when you see that, you know, like for example, if the 200 here, you know, I have it synced so I can see crosshairs synced across time frames. If this level corresponded to this level right here, which is close, that would be meaningful. And if it also corresponded to this level right here, that would be meaningful. That would mean that's a major level of support across 3 different time frames. That's not the case here. So, you know, sometimes if you break through a level on the 4-minute, when I see it break through a level on the 4-minute, I then take a look at the next time frame up and say, okay, where's it moving to? Right now it looks like it's moving to this 100 period MA on the 15-minute. If it were to break down through that, then I would be taking a look at, okay, next stop is the 15 period MA on the 1 hour. There is guidelines. If you're not careful, you can just drive yourself nuts. You'll just be bouncing all over the place. But if you take it for what it is, which is just it's helpful information to see what a future time frame may hold for you, then you're going to get the most out of it. So right now this Russell's coming back to touch this 100 period MA. And if it breaks through, which it just did a little bit, then I'd say next stop is 1544.30, possibly this pivot of 1543.6.7. Put call ratio on the IWM is holding at 2.25. It was at 2.12, but maybe 10 or 15 minutes ago. The VWO has come in quite a bit. It's actually flat now, down a penny just about on the day, which, you know, when the major US indices are down, VWO gets affected, which is kind of silly. Anything that trades on an exchange sometimes tend to have high correlations. Looks like Benzinga has come out with their top upgrades, downgrades. Let's see what they got. News, news, news. I want news, live news. I'm going to guess that guess is a downgrade. Of course, it may be an upgrade based on this headline I'm just reading. Okay, top upgrades. Guess from neutral to buy on some fragrance deal. Schlumberger. Dine Brands. Acceleron Pharma, Vistion, American Waterworks, Finish Line. UPS from hold to buy. That's an interesting one. I haven't traded UPS in the past, but I have traded FedEx. Baker Hughes from underperforming to neutral, not a vote of confidence. No, buying is neutral. Halliburton downloaded. downgraded. Zebra, General Mills, Endo, Aqua America, Mattel, Albemarle, Amtrust, Mimetics Group, and Blue Buffalo. Now, Blue Buffalo, I think that one was announced as an acquisition target. General Mills, that's right. So the downgrade on Blue Buffalo is not really noteworthy because all they're basically saying is whatever price, General Mills announced they're going to buy it for, it's what it's going to trade around. So what's interesting if you're into pairs trades is taking a look at some of these upgrades, downgrades that are in the same industry. Schlumberger and Halliburton, okay, so long Schlumberger, short Halliburton. Long Baker Hughes, short Halliburton, as examples of what I'm talking about. Another one I saw was American Waterworks and Aqua America. I would have to go back and I'm pretty sure those are in the same industry. Just judging by their names. I don't know a lot about either one of these companies. Water and wastewater services to public utilities or as public utilities. So they're basically a private contractor. They operate public utilities. And then Aqua America, WTR. Same business. So one way to think about, doing it is buying outright. If you don't want to short, because I generally don't recommend shorting anything because it's theoretically unlimited risk. But you could buy calls on American Waterworks and buy rather puts on Aqua America based on this announcement today. And what was the upgrade? The upgrade, Wells Fargo upgraded American Waterworks from market perform to outperform and downgraded Aqua America from outperform to market perform. So based just on what Wells Fargo has said, American Waterworks is up 0.5%. Aqua America is down 0.5%. Now, probably would be a good idea before you put on a trade like that, just to make sure it's not just a Wells Fargo thing. That see if there are any other analysts that have come out and said the same thing. American Waterworks, which is the winner right now, so Wells Fargo raised the price target from 83 to 88. They're at 81 now. Baird cut the price target. Baird has a neutral on AWK. Bank of America cut the price target and maintained AWK at neutral. They just reported their on Friday reported their earnings for the quarter. Don't really see any other analyst actions other than Hillard Lyons upgrading Aqua America to neutral from whatever they had them at before. Argus raised the price target of Aqua America from 37 to 41 and maintained it as a buy. So really, it's pretty much what Wells Fargo has said. You know, the other analysts that even came out with anything on AWK, besides Wells Fargo, cut price targets but held it at a neutral. So I'm looking now at on StockTwits the top 25 securities owned by Congress. So if you want to trade indirect pin action on insider information, because you could argue that congressional representatives probably have access to some information that the rest of the public doesn't have. Possibly. Not that our elected officials would ever do anything like that. Some of these names, though, don't come as a surprise. GE, Apple. GE is a surprise. Microsoft, Procter & Gamble, JP Morgan, Wells Fargo, Verizon, Chevron, Disney, Bank of America, AT&T, IBM, ExxonMobil, Intel, Coke, Johnson & Johnson, Pfizer, PepsiCo, Qualcomm, Cisco, Comcast, Schlumberger, Merck, Google, and McDonald's. So there you have it. Because our elected officials need a retirement as well. And now the Russell kind of steadying out. It did trade below the 100 period MA on the 15-minute chart. Closed below it. Now it's back above it. So that's always frustrating when you can't count on a close below as confirmation. Although it is here, I mean, the 816 bar closed right on the MA and now it's below. So you got that going for you. And now on the 15-minute chart, it is back below. So, I kind of spoke too soon. That was presuming it was going to close above, which it did not. And this bar hasn't closed yet even. It's 8:20, so I got about 3 minutes till that bar closes. So it's kind of where we sit right now. I just looked at the clock. It's time for a coffee break. So I will be right back. I just saw something that put a thought in my head. GE, we were just talking about that. Thinking about it from the standpoint of an acquisition target, like you got to think about who would buy GE. The other aspect to it is, would somebody buy GE outright, or would they just step in as GE sells off parts of their business, which they've done in the past? I mean, that's the Jack Welch legacy of wanting to be wanting to only be in businesses that you're number one or number two in. It's worth a thought. I know Jim Cramer says never buy a business on acquisition rumors unless the fundamentals are solid. If the fundamentals of GE were solid, it wouldn't be an acquisition target, though. So that one's more of a speculative play. You at least have to believe that the worst is over for GE, or close to it. Russell weakness is continuing in the futures. Was off of its high of 25,538. Back down a modest one. It's up a modest 152. NDX up 38, Composite up 26, SPX up 9, and the Russell's down 0.25%. VIX is elevated, not quite to 17. It's up 1.6%. The volatility on the Russell has gotten higher, has increased. It's up now 4.4% just about. Now the Dow is catching a bid. Dow futures anyway. Not so much on the Russell. S&P. And not so much the NASDAQ 100 either. If I look at this rally in the NASDAQ, at first blush, this looks to be short-lived because of what we're seeing in the 15-minute and the 1-hour charts. So you can play it, but be careful. I mean, the slow stochastic has not come down, as I've mentioned numerous times. I'm a believer that both the slow and the fast stochastic, once they cross into either overbought or oversold territory, are now making their way either up or down. And generally the approach I take is they do not stop till they get there. Now that doesn't mean that you're not going to see counter trend rallies, because you are, but I don't like to play counter trend rallies because you're going against momentum. You may have the momentum temporarily on your side, but you don't have the longer time frame momentum in your favor. You're going against sentiment. Good trade location may be around this 50 period moving average here on the 1 minute chart. So on the NASDAQ futures, that's a level of about 69.4850. $69.4850 is also $69.4825 to $69.4850 is also the location of the 10 period, or actually 9 period. I'm sorry, 9 period MA. I called this the 50 on the 1. That's actually the 81. Okay. So this is an interesting headline. If if Jerome Powell is saying, because the Fed's inflation target's been 2% for like 5 years or longer, and they have not hit it in 5 years. If Jay Powell is saying that he could put up with 2.5%, I take that to mean before they would consider taking a more aggressive stance on rate hikes. Now that should be bullish for the market. If this was an update that came, well, this came out last night at 10 p.m. So I guess that may have been what was pumping up the market going into the open. So Jay Powell addresses the House tomorrow, the 27th, and then the Senate on the 1st, which is Thursday. So you can bet that folks will be paying attention to that. Oops. That suggests investor fears that U.S. central bankers will react aggressively to signs of stirring price pressures are misplaced. Of course, this isn't what the Fed is saying. This is what people who think they know a lot about the Fed are saying. I'm not saying that they don't. According to Bill Dudley, let me be clear, a small and transitory, keyword being transitory, overshoot of 2% inflation would not be a problem. What does transitory mean? Like, does it have to disappear overnight? You're going to give it 3 months, 6 months, 12 months? I mean, how long are you going to tolerate that? Yeah, right now that NASDAQ was looking like a sell. It kept pushing and hitting that 81 period MA, and it just kept backing off. And then you saw like how quickly it moved down after I got into it, and it wasn't a reaction to me getting into it. It's just what it did. But now it's seeing strength. 69.42.50 is probably where my stop should be. And now the bottom's fallen out. Oh, hey. Hello. So that was an okay trade. Good that I got out, because look what it's doing now. And the reason why I did that is because experience shows me when it makes a big spike down like that, and then you see it start to retrace a little bit, it's a mistake to wait for it to come back down to where it was. I've had too many profitable trades that turned into losses because I did that. Sometimes pain is the best teacher. And sometimes, regardless what the technicals are telling you, if your gut is telling you something different, there's probably a reason for that. The more you do this, the more you'll have an intuition, the more you'll have like a gut instinct. And they'll tell you, yeah, these stochastics are looking pretty bearish right now, but I don't like the move that this thing just made. I think I need to flatten my position. I've had too many where I overrode the gut flag and I wound up regretting it. So let's kind of assess where we are. We have a big spike that lasted about 10 minutes. The open, hold on. This is the open. So from 7:30, excuse me, till 7:39, so just about 10 minutes. About 26 minutes later, hitting a new high on the day, and then just selling ever since, with the exception of a spike here and a spike here. Now this is the NASDAQ we're looking at. If the trend is your friend, I was saying if the trend is your friend, then that's what we're looking at. So what we're waiting to see here is a break below trend line. And we just got to break above trend line, which is not what I was expecting to see, considering the fact that we had moving averages that were also acting as a bit of resistance here and here. So we will see how long or short-lived this move up is. What I am paying attention to right now is this convergence in the fast and the slow. Oops. Right now, the action favors the bulls. We just saw this crossover here. That doesn't mean the slow can't still pull the fast down. It can. Once this fast stochastic hits 80, which is overbought, most likely what it's going to do is turn down. Look at this example here. Crossover pulls the slow with it, kind of falters a little bit, comes back down, crosses below the slow and pulls the slow back down with it. I would expect it to do that again, because if we zoom out to the 15-minute time frame, this is just a temporary leg up on the fast. The slow has crossed over. Both the slow and the fast spent some time up in overbought. If you look at the 1 hour chart, same story. You know, this bar will be closing, it's 9:06. So this slightly bearish stochastic crossover just formed almost 7 minutes ago. That's not to say that we can't see a cross back over or some weakness in some really shallow histograms here. The odds don't favor it. If I zoom out even further and look at the 4-hour chart, what I am presented with is a bullish histogram that is weakening. So what happens here, honestly, is a crapshoot. IWM put call ratio is holding steady at about 2.12. Put call on the Qs is 2.42. Facebook, which I have, the put call on Facebook is actually below 5, so, or below 0.5, so that's still bullish. If I look at other components of the NASDAQ composite, Netflix, that's basically on the cusp of bear, bullish, and neutral. Google's bullish. Apple, Amazon, Qualcomm is neutral. So if the Qs are bullish or bearish, which is the NASDAQ 100, and if some of the most recognizable names in the Qs are bullish, what the heck does that mean? Because I just pulled up, okay, the FANGs, Facebook, Amazon, you could argue Apple, Netflix is neutral, Google. So they're bullish, not overwhelmingly so. It's not like we're seeing, 0.25. We're seeing 0.5. But those are some of the biggest components of the Qs by market cap. I'm just looking at the PowerShares website on the Qs. Forgot about Microsoft. We already looked at Apple, so the top 10 holdings, looks like top 10. Apple, Microsoft, Amazon, Facebook, Goog, both classes, GOOG and GOOGL. So I don't think you really need to look at those individually to guess that they probably have about the same put-call ratio because it's really the same company. It's just a different question of voting rights. So actually that's a more significant difference than I'd expected. Intel, 0.268, that's very bullish. Cisco, forgot about them, 0.268. Comcast is bearish, 1.8. And Nvidia, which we already looked at. So if 9 of the 10 top holdings have a bullish put-call ratio, why is the Qs overall bearish? I thought there was a way to plot put-call ratio on the chart, but maybe not. So that's interesting. So what we have now is on the 4-minute chart, the fast has crossed decidedly above on the 4-minute chart. On the 15-minute chart, looks like that's about to happen. So what looked like an imminent crossover is pulling back. So the really bearish play has been deferred for now. So looking to retake these levels. Want to zoom out to see what upside reference there is based on past price action. So those are some key upside reference points. So now the NASDAQ is backing off of this first upside reference point. Which would have been signaled by this right here. It'll now be important to watch here. Which I can tell you what's going to happen. Dow's back up to 240. NDX up 58. Composite up 45.6. S&P up 16. The Russell is still down, but off of its lows. It's down 7.76. VIX, which is the volatility on the S&P index, is down 1.5%. The volatility on the Russell has come off of its highs. It was up 4.5%, I think, percent. It's now only up 1 3/4. This has not really budged at all today. 2.842 on the 10-year yield. Dollar's not really done a whole lot. It's down 4 basis points. Gold is up, 0.3%. Crude's back up. Crude futures anyway were down just before the open. So now we're seeing some more significant selling on the NASDAQ futures. If you look at, this is an example of what I was talking about earlier. If you take a look at where my crosshairs are, the, whatever this is, 9-period moving average and the 84 on the minute chart, or no, 27, my apologies, have in common that they are a potential level of support for these futures as they come in. There's no corresponding level on the 15-minute or the 1 hour. So for right now, it seems like the best course of action is just kind of sit and wait and watch, wait to see if the NASDAQ gives us any additional clues. We can look at, Dow, to what they're looking like. I would say more bullish than the NAS. Because, yeah, if you compare that 15-minute chart, man, I got some major lag. Hold on. Give this a chance to redraw. I think I may have been pointing to the hour chart and calling it the 15-minute, but yeah, that's what I've been doing. My bad. It's still important. Am I crazy, or does this thing keep drawing these time frames differently? I don't think I had enough coffee this morning. No, wasn't that. I think I just didn't give enough time to draw. So NASDAQ view is probably then on balance just as bullish as it is for the Dow. The S&P